The new IG trading platform, fewer clicks, flexible layouts and time-saving settings, split charts across multiple timeframes and discover price change alerts, orders to part close, an integrated Twitter feed and more. Try IG trading now at IG.com.
Good morning, I'm Chris Beach and welcome to Charting the Markets on IG Live. We have a steady recovery across the board for UK and European indices, very much a mirror image of what we had yesterday, or replication rather of what we had yesterday. An early weakness in the pre-market for the UK and for the likes of the DAX being bought into. Now, yesterday the big news, of course, was that Germany faces a second, or is likely to face a second election. That's now very much more likely this morning as Chancellor Merkel declares her preference for a second election rather than trying to go for a minority government. However, the market is now adjusted to that fact, as it seems to have adjusted to every other potential crisis so far this year, and is moving higher. And as we go on air, the Bank of England's Monetary Policy Committee, or members of, are currently in front of the Treasury Select Committee discussing the outlook for monetary policy. And that has been enough to push the FTSE slightly higher and the pound down, as they suggest that rate rises will continue to be very gradual, and that while wage growth has picked up, they are not too keen on getting carried away on the rate hike front. We also have the news that Janet Yellen will step down from the Fed entirely in February of next year. Not really a surprise. I can hardly blame her, having been unceremoniously rejected for the role for a second term. So that will be a bit of a change there. She speaks today at around 5 p.m. UK time, but given she is now essentially a lame duck Fed president, her words will not move markets as much as they used to. Otherwise, it's a fairly quiet day. We haven't had much in the way of economic data. We don't have much more this afternoon. We do get a lot more tomorrow, as we head towards the Thanksgiving holiday. The Americans are trying to cram everything in before they go away. But we're likely to see, again, a further drift higher for US markets and probably for everything else as well, as we head towards that Thanksgiving holiday. Turning to the indices space this morning, the FTSE 100 currently trading higher at 74.05, and you can see there again this steady recovery from the lows of last week. We do have really a new trend developing. Previously I had a trend line that rose and hit this low here, but that was probably too steep, and never trust a diagonal line, as they say in markets. And this one now, so I've drawn a new one down towards here, which might probably be more accurate, certainly is more gentle and probably a greater reflection of what we're seeing in terms of the general trend higher for the FTSE 100. The 73.60 area was firmly defended last Wednesday and again on Friday and again on Monday. So you could see that every time the index dipped down towards that level, it then met fresh buying. And again, that has now followed through with a push back above 7,400, only just, but still picking up. And now we look to see whether the 74.10 area, where gains stalled over the course of the last 3 sessions, whether that can be breached and whether we have expectations of further gains. 74.50 would be your next one to look out for. That will put us above that blue 50-day moving average as well. That would be a good first step for the index. And then onto this key 75.50 zone, the 30 points either side of that, really, where the index stumbled in October and November. If we can breach that, as we've been saying before, that is then the last hurdle before the push to that June intraday high at 7,600. So a firm recovery here for the buyers, once again, stepping in back above the 200-day moving average. Nice dip in the trend, oversold stochastics, MACD turning potentially as well, and everything lining up for potential for, we suspect, further gains heading into the end of November. And a word on that for indices generally, we do tend to see that the last 10 trading days of November, excuse me, the last 10 or so trading days do tend to see quite a bit of gains for the month. You get a week period in the middle. We're now getting through that essentially, and from today or tomorrow you tend to see indices on average excuse me, moving higher into the end of the month. Turning to the DAX, that is also moving higher this morning. It's currently trading at 13,127, and as 73.60 was for the FTSE, 12,844 was for the DAX. Last week the index, that was the low from Wednesday's session, and then we tested it, well, we got close to it yesterday and bounced higher, and we're continuing those gains today. And crucially, we're at this point in time, as you can see on this daily chart, moving back above this 13,095 level, that previous high from October. So if it can manage a daily close above this level, then we are almost, well, very likely, I think it's, don't say almost certainly, but very likely to see a move back towards that all-time high from November, up at 13,532. Very strong recovery here for the index. The first time it's been oversold on the stochastic since August, and you know what happened next. It may be that that is just the first step. A move back to 13,500 is just the first step in towards a broader end-of-year rally. Again, the 4-hourly chart providing a good indication. There you can see the strength of the buying coming through at 12,850, and any further gains would suggest a move 13,230 and then onto that all-time high. I think we need to see a daily close, not just a 4-hourly close, but a daily close below that low from last Wednesday to get even remotely bearish, and then even then you've got 12,678 coming in as further potential support. And the S&P 500 again doing very well yesterday. Another recovery for the index. These dips do not last very long, it seems. Americans determined to get into the mood, holiday mood early on. Again, stochastics turning higher once more, with really all we've got left now is 25.97, and then 2600 is just a hop, skip and a jump away. You saw a test last week down below 25.60, down towards 25.56, and again we've moved higher once more. So the 4-hourly chart, again, it's not surprising, bounce off that 200 period moving average, and now with the last obstacle left before a fresh push to all-time highs. And even if we had lost that 25.50 zone, you can see 25.42, the lows from the latter half of October, also coming in as potential support. But the uptrend for US markets generally, not just the S&P, firmly back on track pre-Thanksgiving bounce. The market tends to do well around Thanksgiving. It's not surprising to see this kicking in, as remember we're slap bang in the middle of strong Q4 seasonality. So it could be that we see fresh all-time highs on this index by the end of the week, if not even perhaps by the end of tomorrow's session, with the Americans undoubtedly looking to get a new all-time high before they all clock off for Thanksgiving. Turning to FX markets, euro continuing to be slightly under pressure this morning after a slightly better performance yesterday. Really, the initial shock from Chancellor Merkel's decision to go for, or at least suggest that she prefers a snap election, and you can see they're not a bad little descending channel coming through on the euro-dollar pair. If we watch this at the moment, that's really what we're seeing. Ignore this downtrend line here. You can see that this is probably a decent channel to look out for. We did go towards the bottom end of it. A bit of selling coming through in the early session. A slight recovery off the 200 period moving average. Further declines towards the bottom end of the channel when we go towards 117. A rally up towards the top end will take us back towards 117.80. But again, you've got a sequence of lower lows and lower highs coming through here. So until that's broken one way or the other, it looks as if this downward channel will persist. And then if you've got 116.62 and then on down to 115.74. If we do spike higher, 118.40 and then 118.57, 118.60. Definitely, excuse me, the areas to watch out for on the upside, at least on the hourly chart here. You can see plenty of resistance around the 118 area. And if it managed to push through that zone, you're on back towards 120 and then 121. Oops. Pound also trying to recover lost ground, but being really knocked back from this crucial 132.70 zone. As I said, the Bank of England members of the MPC currently giving testimony to Parliament, members of Parliament over the outlook for monetary policy, and at the moment it's not been too hawkish. So really the pound's move higher over the last few days. It has been a steady trend here, not a bad little bounce from the lows down at 130.60 on last Monday. Higher lows coming through all the way here, higher highs until now. We've had the rally to that 132.68 and we've fallen back again. So as you can see, since last Thursday, the pushes just down below this 50 period moving average have tended to be the point at which the buyers step in. So we'll watch if that persists again today, but certainly a move back below 131.84, the low from early on Monday, would likely signal that this bounce has run its course and the dollar is once again beginning to recover its form. Really, if we do see a move back above 132.68, you've got 133.41 and then 134.27 before it pushes back on towards those September highs. It is still holding its uptrend line. It is worth noting at that March rising trend line. We bounced off it all the way through November, really. And so that would need, I think, a move back below 130.50 to suggest that that trend line is now broken, along with that crucial support that has held all the way through October and November. And finally, turning to dollar yen. This has been on a steady push lower, drop below the 50-day moving average on Friday. Recovery from oversold levels yesterday, but we'll now see whether this can maintain itself or whether we do have further losses likely. And at the moment, really, we had a sharp rally from the lows of yesterday down at 112 up towards 120, 112.65, but the sellers coming in once again with abandon, taking their chance with those overbought stochastics. That MACD as well rolling over, and so from the look of it, it does look as if we'll have a push back down towards 111.94, at least in the short term. I think to get particularly optimistic on the outlook for this one, and to suggest a return to that 114.37 higher, that crucial downtrend line, we'll need to see it back above 113 in fairly short order. But for the moment, the intraday rallies, as we can see on this chart, continue to get sold, and that doesn't really change unless we get a push above 113. Finally, gold also under pressure this morning, doing its best to try and recover lost ground from yesterday's session, where it suffered a very sharp knockback. Again, every time equities tend to rally strongly as they did on Monday, gold gets knocked back. And while it is clawing its way higher, back towards 1295 and 1300 itself, it's really not being able to maintain those gains. The risk is now that you've seen it knocked back sharply back to that 100-day moving average, and that now we'll see further declines from this point onwards. Has been a series, though, of higher lows since the 3rd of November, so that at least is at some comfort for the bulls. It has pushed higher overnight, but only slightly. So I think if it does turn lower and it does go back below 1274, then you've got 1270 and then 1264 coming into play as potential horizontal support if that rising trend line does go. You have at least got higher highs as well, so the trend is intact. I don't think you could be faulted if you did think about going long in this rising trend. At least it does conform to the idea of a rising trend, but it looking slightly skittish at the moment, and the risk being that if you get a dollar bounce into Thanksgiving, you could see gold drop back rather rapidly. And finally, turning to the oil price, US crude currently trading about 0.5% higher, 56.64. It's been a bit of a volatile period for crude after what's been a very, very strong rally. We've seen it find support, though, at the 100-period moving average on the 4-hourly chart. But the risk is that we're not seeing a return towards that 58 high that we saw in the first part of November, and that this potential downtrend line just coming into play, that we're getting our first lower high. And then we'll see whether it does turn lower and create a new lower low. At the moment, it's a bit of a difficult one to call, but certainly that trend line does appear to be holding for the time being. And you can certainly see the oversold stochastics, people just taking the opportunity just to sell it once again, having hit the highs yesterday's session at 56.92. If it gets a close above 57, that would be a relatively optimistic sign and suggest that we do see a move back towards $58. Otherwise, as you can see from the chart, plenty of horizontal support below where we are now, having had a steady rally over the past few months. So 55.67 down towards 55, 54.95, and then $52.93. All potential areas where the bulls might step in to try and rescue what has been a very strong rally from the lows down at 42 during the course of the summer. So very little on the calendar for the afternoon, just that speech from Janet Yellen after the close in London. So watch out for any comments she may have on monetary policy, although of course, given the fact that she steps down from the Fed entirely next year, her comments will be relatively limited in value, I suspect. Otherwise, we look to see whether US markets can continue their gains from yesterday and push towards record highs in time for the Thanksgiving holiday, which of course US markets closed entirely on Thursday. That's it for me. Thank you for joining us, and we will see you again tomorrow at 10:30.
The new IG trading platform, fewer clicks, flexible layouts and time-saving settings. Split charts across multiple time frames and discover price change alerts, orders to part close, an integrated Twitter feed and more. Try IG trading now at IG.com.